Welcome back to Approved AF. Today, I am joined by someone who has lived inside more compliance audits than most people could even imagine. Ryan Kinch, CEO of Licensing Store and former General Counsel for a nationwide mortgage lender, has overseen more than 300 regulatory exams and has helped hundreds of brokers launch and scale. If you're building a mortgage company from the ground up or trying to stay ahead of compliance as you grow, this conversation will change the way that you think about systems, processes, and what being compliant really means. So let's jump into it. Hey, Ryan, welcome back to Approved AF.
Thanks for having me.
Today, we're tackling something most don't get excited about, and that's compliance. But it's the very thing that can make or break a growing mortgage company. So let's start there. Why is compliance such a blind spot for new and scaling companies?
I wouldn't say that it's a blind spot. I think that um, most broker owners that I've encountered are acutely aware of compliance, and in fact, it's sort of is one of the predominant issues that they're thinking about when they start the business. You know, I think that there are challenges in where to devote resources, especially initially, because you're a small company. You can only focus on so many things at once. And so, how do I allocate my resources to ensure that I am in compliance, and do that in a pragmatic and practical and cost effective way.
No, that's a great point, Ryan. And before you became the CEO of Licensing Store and started this company, you were actually on the legal side of things. How has that shaped how you look at compliance systems?
So yeah, I before I started this company, I spent 10 years as a general counsel for a retail residential lender. And so I would say the biggest thing that that background used to help me kind of shape the guidance that we give here is I was able to go through each or multiple areas within a mortgage operation. So not just the origination aspect or the alphabet soup of federal regulations, but also the um, you uh, additional tasks and responsibilities that all have to occur. You know, Marketing, for example, needs to develop advertising content, but then somebody has to put it on the website, right? Or however those areas intersect. And I think that the background, especially having a background with legal analysis, is that allows you to to put things into the required buckets, and it gives you a sense of organization of each individual element. To be clear, like Licensing Store isn't a law firm, and well, I'm an attorney by trade. That you know I don't give legal advice to clients, but in terms of pragmatic and practical advice on how to just think about these requirements and segment them in a way that doesn't feel overwhelming or daunting, I think is really where I draw on that experience.
Can you define what compliance is when you're using the term?
Kind of I think compliance is awfully broad to define in a single sentence, or even group, because it affects so many different things. You know, I usually tell my clients that it's not about being perfect. I mean, if I were to summarize kind of a theme, it's not about attempting to be perfect. It's about designing a a system that, is reasonable for the size of your organization and that um, is able to, detect, potential, shortfalls or, areas where maybe a process adjustment is necessary, and then, you know, be able to implement that and then be able to, test to see if whatever your fixes were are actually working or not. So, compliance is sort of, applying that, mindset of wanting to do things the right way and having a rubric to go through. And, you can put in, whether it's, ECOA or RESPA or, something that, again, is related to federal law or, a state specific disclosure, privacy policies, all the way down to, you know, onboarding a loan officer or an employee and, employment packages, which, would be required if you're, originating mortgages or if, you are, you're working at a car dealership. I mean, you're in the business of employing people too. So it's kind of the applicability of that mindset to various functions within a business.
So, for someone that is just starting out, they're just launching their mortgage company, what would you suggest be the bare minimum of a compliance structure that they should be having in place from day one?
I think that you want to have, um, first of all, um, a centralized location where you can house your operational documents, so your policies and procedures. Um, Off the shelf policies aren't necessarily helpful, and states will view those as like, yeah, that all sounds great, but are you able to follow your own policy? And if the answer to that is no, then it's almost like you're better off having no policy at all than having a policy that you don't follow. So the first step I think would be is um, you can't expect your staff or others to know what the requirements are if they don't know where to look. So putting that into some centralized location and having people know where this information is step one. Step two is version control. You know, Policies need to be reviewed. Mm, General rule of thumb is at least annually, and sometimes more frequently if there's a change of law that occurs. Excuse me. You know, in between the annual review. Um, so having a version control, where we say version one, policy implementation, then 1.1 added a section for mandatory new hire training on this subject, whatever. It shows the evolution of that document and the life cycle of it. So that way you can kind of track the line of thinking, as your organization evolves and as the policies evolve. And then I think knowing when to delegate out some of the tasks that you're imposing on the organization to maintain compliance. Whether that's you hire an internal person to be kind of a coordinator. Some companies they will place their focus initially on quality control, and so there's loan file reviews. It can be outsourced. I mean, Licensing Store has an entire compliance division where we assist companies with examinations and policy modifications and give general compliance advice. So knowing when is the correct time to um, you know delegate that out is probably the important third step.
And then what is one mistake that you've seen brand new companies make that again seems like it might not be that big of a deal, but it ends up costing them later on down the road?
So now when I can drill down a little bit, I mean I think the one of the biggest ones is um, you know statusing your loan files correctly, and timely and accurately, and also being able to separate what is an application versus what is a lead or a prospect, and even, storing those in separate, systems. You have a CRM for your leads and your prospects. And then once they turn into an application, how ever you define it, most companies will just follow the Reg Z definition, which is the 6 pieces of information. There's other ways to do it, but once a lead turns into an application, then it moves over into an operating system, and now you have sort of a conception of a loan. It gets assigned a loan number. It goes through the disclosure process, and eventually it's either submitted, or perhaps borrower withdraws, or eventually it goes cold, and you give yourself so many days, 90 days to cycle it out, and potentially restart. And the reason I bring that up is that you're going to be required to report all of your loan data in the NMLS, for compliance examinations, a whole host of information, and sort of bad data in, bad data out. You have to be able to have that accurate, and nobody can kind of go back 2 years and remember what happened on the Johnson file, or whatever. Like, do it in real time and have a process for that, and then impose that on your staff. So I think that's probably the biggest thing. If I could tell someone one piece of specific compliance advice, above all else, is make sure that your loan data is accurate, in terms of the status, in terms of information about the borrower. I mean, that's like the baseline.
Absolutely, 100%. In my house, we will often say, it's a big phrase in our house, like, luck isn't a strategy. But what would you say to a founder who says, oh, I'm going to wing it, or I'll figure it out later? What is the real risk that they're taking with that kind of mindset?
If they're saying I'm going to wing it, I mean, I think it's sort of the analogy I give to people is, if you are going to the airport, they say you got to arrive so many hours early, right, to make your flight, and then it says 2 hours, right? Well, yes. What if I only arrive an hour and a half early? Like, you might be okay. I mean, they cut it down. Like, what if it's only an hour? It's like, well, you're checking a bag. Like, I mean, sort of the more and more you push that envelope, the more likely it is that one of the risks you're taking is going to um have an adverse consequence. Like, all small businesses have to take risks. All businesses do. Like, I don't think that means you have to be cavalier about things. Decide where you're going to take risks, and then do things to mitigate or offset that risk, and by being conservative in other areas. A lot of one of the examples for is if you're going to uh use a
No, I really like that though, because it's very true. Your life, you have to take risks. As a business owner, you have to take risks. Starting a business is a risk, but you don't just wake up one morning and hire 5 people. You have to be strategic in that in order to make that risk potentially worthwhile.
right, right, yeah. Sometimes I ask people, when they want to take risk, it's do you want to eat well or sleep well? I don't necessarily know if there's a right or wrong answer to that question. But as kind of they teach you with negligence calculus. I mean, it's what's the likelihood of something going wrong, times the severity of the consequence should it go wrong, and is that greater than, less than or equal to um, the legal term is burden, but the cost and the expense of putting something into to mitigate against that harm, and those are balancing tests that I think all business owners, I think they inherently do it in their minds.
Yeah.
They may not have terms for it, but they're all kind of making that measured judgment. And so you're kind of striking that balance, and having good resources to rely on, you know in the areas where maybe you're not comfortable, or you know aren't as strong in in certain elements, like that's where shore up with subject matter experts, or additional training for yourself, or whatever the case may be.
Absolutely. So, pivoting a little bit, let's talk about expansion. Like when a company goes from one or two states to five or more and adds new, you know, business activities or something like that, how should their compliance game evolve with their growth?
Um, I mean, I think that two things. If you're expanding geographically, in a lot of companies, there's two schools of thought. One is, I'm gonna, you know, be in my home turf. I'm a Michigan loan officer, or I'm a, you know, you know Wisconsin, or whatever, and that's my territory. That's where I do my loans, and then maybe I'll do the surrounding states, or a lot of people in Michigan will tell you they want to be licensed in Florida too, because everybody's got a second home in Florida. So before you make those strategic jumps, learn some of the nuances of entering into a new state. Um, One example there, that analogy that I use is, sometimes somebody will be in Michigan in January, and it's cold, and then they haven't never been licensed anywhere else. All of a sudden they get down licensed somewhere else, down in Florida, and they get down there, and wonder why it's hot in February. It's like, well, you haven't ever been to this state, so it's different rules that apply, and you need to be familiar with those. So having that kind of look before you leap, or let's dip a toe in before we jump in head first, I think is crucial for geographic expansion. And I would say that mindset, plus really looking at your own processes, is important for companies that want to make the jump from broker to correspondent. And that's a very popular strategy these days. Is when you become a correspondent, you are no longer subject, for example, to the cap on the 2.75% cap that brokers are, and you get to close loans in your own name, and be on the disclosure estimate. That's a whole different ballgame. Lending is an inherently more difficult activity, and is more complicated and involved. And so ensuring that you've got the staff in place, or the processes in place, to handle the fact that now it's you're no longer arranging a loan, right? That's what a broker does. You're making a loan, and you're losing money off of your warehouse line for your borrowers. I mean, that's just much more complex. So kind of bearing those things in mind, and again, the let's utilize our business partners, whether it's wholesale lenders, or compliance advisors, or a combination, to prepare ourselves for,
Mhm.
rather than just doing it.
What does a simple, healthy compliance system look like for a smaller to mid-sized company?
I mean, I think, again, kind of what we're talking about initially, policies and procedures that you're able to follow. I strongly, encourage companies to leverage technology when they can. This is sort of you know, the short of it is things have to be done, in the loan process, and it's either, you can do it, or require your people to do it, or, you have to do it for them, but, one way or another, it has to be completed. So, um, leveraging technology to sort of automate some of that process, I think is, you know, a great way to, tackle it. Now, that can be an expensive proposition. You know, not everybody can afford, expensive technology systems right out of the gate, or maybe they don't want to spend their money there. So, I think that the health of a compliance system is probably just, again, taking the mindset and making sure that we're entering that into our thought calculus, along with, I want to originate the loan, I want to be profitable, I want to, do X, Y, and Z. Compliance doesn't have to be like the, only thing that you talk about, because that's no fun. Like, we want to, write loans, but, you know, it should be, one of the items on the list.
Yeah. Yeah. Compliance is not a fun term to use. It's not an exciting one. It's not super, you know, motivating or anything, but it is so important to continue to talk about. It is important to have those systems and requirements, those barriers in place to make sure that you aren't falling out of
Mhm.
compliance and that way you're not jeopardizing your business, your license, or your livelihood. How do you recommend companies track fulfilling and meeting those deadlines and reporting requirements? It can often overwhelm a team. So what would you suggest that they put into place?
For meeting reporting requirements?
Yeah, for tracking those deadlines, reporting requirements.
Again, I think if you commit to um, statusing loans, or ensuring that your data is up to date in, either in real time, or within a certain number of days, like you're doing it on a kind of a rolling basis, and it's less daunting or overwhelming at the end of the quarter. Why? Because you've been doing it for the last 3 months, and you're not
Yeah.
trying to cram a 3-month project into a couple of days. Like, this is very classic. You got an exam coming up, it's coming. Like, you better be in the library studying. I mean, and figure out how much time is needed for that versus how much time is needed for doing the other stuff. And maybe as you get closer to crunch time, you increase your focus on some of the compliance aspects. Or again, if you're using an outsourced service, partner with them and just kind of ensure that they're getting the information that they need to help you, build whatever reports you have to build, or file whatever you have to file.
Have you ever personally experienced a client coming to you with a compliance situation that could have easily been prevented, and how did you assist them in getting it remedied?
Um, yeah, that happens, more frequently than I think people would like. I mean, sometimes that's how we're first introduced to clients, is because of some sort of emergency or issue that they're confronting, and so I think that the solution, and usually it's in the context of a regulatory review or something of that nature, is you be transparent and upfront about this is the issue, we're committed to correcting it, and then you devote the resources that are necessary to sort of address whatever the problem was. And that can be packaged in a whole lot of different scenarios, just sort of depending on what the issue is. Whether it's you didn't have, a processor license, because they were 1099 and you needed to, or you weren't, completing, BSA training, on an annual
Not
basis.
putting your NMLS number on your social media.
Yeah, and a lot of those too. I mean, it's important to remember that, you know, especially the technical violations. It's not like people are trying to hide their NMLS number to do something untoward. I mean, maybe just didn't know that in Minnesota or Pennsylvania, for example, you have to use your individual and your company NMLS numbers. Yeah, if for whatever reason somebody forgot to do that, like, or it was done on your website and your Facebook, but they forgot about LinkedIn, I mean, it's not like you get the death penalty, for that. It's
Yeah.
That's what examiners are trained to do is identify that stuff, you know, and tell you about it so you can, put fixes in place. The biggest thing is, if they do identify things, you best not, have them come back a couple of years later, because that's one of the first things they're going to look for is they're going to take out the previous exam, see what the findings were, have those been corrected? Yes or no, in part. And then, they'll, continue on. So, you know, I would say that's, the biggest thing is, avoid repeat findings.
Yeah. Learn from your mistakes and put systems in place that help you to not repeat them. Grow from that.
Precisely.
How do you talk clients off the ledge when they're in a panic mode or if they've ever missed, a report or an exam request?
I think first thing, draw on experience, because I can truthfully say, like, look, you're not the first person to, have a late filing. I mean, let's not, let that be a, message that it's okay to, you know, just not file things on time. I mean, I think that, even if it's your first one, if you don't file something timely, like, you could be, fined or, penalized or whatever. Um, but again, it's not as though they're going to come and put a lock on the door. Um, you know, Especially, if it's, a first time, uh, offense. A lot of regulators, the initial examination, the first one is more educational, than anything else. I mean, certainly if there's a tolerance violation or whatever, they'll require restitution. But you know, for the most part, they're there to help you, provide guidance, on how to comply with their laws. And so having the owner, or whomever is kind of having anxiety about finding, like, you know realizing that the regulators are not there to be adversarial. They're there to be a guide, or a provide assistance, in what the requirements of their state is. And as soon as you stop viewing this as a confrontational, or a gotcha situation, I think that you can approach it with a lot more clarity of mind, and recognize that, yep, mistake was made, we've got it corrected, before anybody had to tell us, ideally. But in all cases that you attended to it, and here's what we're gonna put in place to ensure that it doesn't happen again. And maybe that system, or that improvement doesn't work for whatever reason. You can expect to be clairvoyant. So again, it's getting back to are you paying attention to your organization? That's kind of where it all the genesis comes from.
And with that being said, I think that falls back into an earlier question and answer that you gave, was updating your policies to match what you actually can do, and making sure that everybody is on the same page in your company about that new updated policy and where to be able to find it.
Yeah. And I mean, there are some things that are just mandatory to have, in policies. If you want to be doing business in, the state, you know, they're going to require X, and you know, there's no getting around that, right? It's required by statute. The regulator can't really waive it even if they wanted to. These arm the executive, they can't overrule the legislative branch. So it's written in the law, you have to follow it. But a lot of times, it's stuff that you're already doing anyway. You're putting in writing, like you know, Georgia, for example, BSA policies have to say we don't accept cash payments over $10,000. Something that you don't. I don't think that there are any mortgage companies out there that are actually accepting cash payments. Certainly, none of the clients that we have, they don't accept payments. Period. So, a lot of times it's stuff that you may be doing anyway. You just got to put it into words. And where the difficulty comes is when you're discussing in your policy, like, here are the steps that I'm going to take to like generate some report or put out some document or what have you. Creating that can be more difficult than just promising not to do it, something, and then not doing it.
And you've been through how many audits at this point in your career, roughly?
The preferred term the regulators we use is examination. I mean, stateside, probably, somewhere between 350 to 400 over the course of a decade and a half, plus some on the federal level with again, the alphabet soup of regulators. So they run the gamut of being very involved, like they're coming on site for multiple days. You have multiple examiners, to and being less involved. Everything's done remotely, and recently with the implementation of the SES and more states adopting that, a lot of times if you get examined, pretty thoroughly by state X, and then another state comes in immediately after that, sometimes they'll just adopt the findings of the first state and say, yep, that's what we would look for. Looks like let's see, West Dakota did their thing, so East Carolina doesn't have to, using pretend names there, but so
yeah, anybody who thought West Dakota was a real state, you can stop listening. But no, with that much experience in your brain bank, if you had to give one piece of compliance advice to a new or growing mortgage, specifically the CEO who is just looking to start off on the right foot, what would that be?
Compliance advice to the CEO?
Yeah.
I mean, and if it's going to be something more general and not just make sure that your loan data is accurate. It's sort of like have a good foundation, have a good cornerstone. I think that probably be just breathe. I mean, starting a business is scary. Like, trust me, I know. I never thought I was gonna do it, and it was very frightening. It still is sometimes. And especially when you're in a very highly regulated industry. A lot of these, smaller brokers where they're hanging out their shingle for the first time. I mean, they may have been under the umbrella of a very large lender, for a long time, and that lender has all sorts of technology and billions of dollars to spend, and they've got teams of accountants and lawyers just dedicated to privacy, and then another team dedicated to truth in lending. I mean, and it's easy to kind of find comfort with all of those barriers in place. Those are all designed to protect the company and protect you and your loan officer there. So going then out into, the wild blue and say, I'm going to do this on my own now, because I want to be entrepreneurial. I, want to, be my own boss. I mean, certain, that's what we applaud. That's, our ideal client, right? Don't be intimidated by, the compliance requirements, because there are resources to, help you. A lot of lenders, provide, great systems with, setting up your disclosures, for example. There are, companies out there like Licensing Store that, help you with the NMLS, help you with reporting. So, just, know that there are resources available, and, it's incumbent upon you as the owner to, raise your hand if you need help, or ask, and know that you can, and that's okay.
And on that note, where can they reach out to find out more information about you, licensing store services, and get any kind of questions answered?
Sure. So, I mean, I usually give my cell phone out to all my clients, so they can call me, 586-531-1826, or Ryan at licensingstore.com. Go visit our website, licensingstore.com, and on there will be obviously stuff about licensing, but also in the other areas that touch and concern the business once you are licensed, compliance and QC and examinations and the like. So that's a great way to get in touch with us. Our staff is ready to help. They're very knowledgeable, and we like solving problems. That's sort of fun for us, and so don't feel bashful or whatever if you got an issue. Like, that's why we're here, is to help you. That we assume that you may be confused about something, and it's not a reflection of you as a broker. It's just, this is complex stuff. So,
and it's actually pretty cool to reach out and ask for guidance and help when you don't know something.
Yeah. And you sort of, had that moment where sort of, everything connects, and like, okay, and like now I get that, and I'm less anxious about that element, because I have a more wholesome understanding of everything that goes into it.
Exactly. Well, thank you, Ryan. Thanks for taking the time to talk with me today.
Thank you for having me. Appreciate it.
Thanks for listening to this episode of Approved AF. If this conversation helped bring clarity to your compliance or licensing strategy, make sure to like, subscribe, and share this episode with another mortgage pro who may need it. Follow along on Instagram at ApprovedAF_licensing for more insights, breakdown, and behind-the-scene conversations. Until next time, stay licensed, stay compliant, and stay approved AF.